either made of gold or platinum. I'm not really sure, but they have a lot of stuff that's made out of gold. So you take into account all of the gold that's ever been mined, and the Department of the Interior runs a report annually on how much gold is yet in the ground on a global basis. Total those two together, and you divide all the debt by all the gold, and it tells you what the true fundamental value for its most important function is. And the most important function for gold is to hold its purchasing power over time. That means I did it pretty recently, and the numbers came out that the true fundamental value of 1 ounce of gold is somewhere between $33,000 and $40,000. So if the spot market, which is just gold contracts, and they can create as much gold as they want without limitations, but the market reads it as if it exists, that's how they suppress the price of gold. The report, the Bank for International Settlements, so the BIZ, did a report a couple of years ago on what place for gold in reserves. Okay. I think they did in 2020, or I don't know, but you can pull it up. And what they say is that gold held at home, mind you, is the only, not one of two, not one of five, the only financial instrument that runs zero counterparty risk. Zero. Because to your point, it is the single safest thing that you can do. This is why the global central banks are loading up on more gold than they ever have since they started tracking, because they want to retain their freedom, they want to retain their choices, and they want to retain their independence. And that kind of sounds like exactly the same reason why we need to be doing that too.
For most of history, money wasn't paper. It was gold and silver. Early U.S. banknotes were redeemable for precious metals, but by design, governments phased that system out. Federal Reserve notes look similar to gold certificates, yet they are fundamentally different. A certificate represented tangible wealth. A Federal Reserve note represents debt. Over decades, people used them interchangeably until gold-backed money disappeared altogether. The public hardly noticed, but the consequences were enormous. We gave up direct control over governments and central banks. Once citizens could exchange paper for gold, today we can only hold debt-based currency.
All of this, and even when you're talking about cash, just pull out a bill and look at what's on top, and it's the Federal Reserve note. What's a note? Yeah. A note is a debt instrument. So we actually work for government debt.
Yeah.
And when you really do understand that, boy, it changes your perspective. But this is how they do it. They keep things looking as normal as possible. And I absolutely love doing this example. Okay. So first, we're walking around with this. And oh my goodness, you put too many in your pocket. It could pull your pants down. It's so heavy. How inconvenient. Ugh. Why not just have these easy little bills? And oh, by the way, it's a gold certificate. Look at the gold on the bill. And you can walk into any bank with this and walk out with this. So it's just the same. What's the problem? This is $20. This is $20. But at the same time, they used corporate debt and they converted that into ba-bam, Federal Reserve notes, which look an awful lot like the gold certificate. And so we had 20 years of everybody using all three things interchangeably. So what did that do? It taught people these were all the same. So when this went away, this was left. And everybody's like, oh, cool, rock and roll hoochie coon, nothing changed. When in reality, everything had changed. And the biggest thing that had changed was that we, the public, gave up. When we agreed to this, we gave up our power over elected and unelected officials. Because up until 33, if you did not like what the government was doing, or you did not like what the central bank was doing, you just walked in with this and you walked out with that. And that put restrictions around how much new money and how much debt they could take on. Because in the beginning, it was this. This is a 1 ounce gold coin. See how teeny weeny it is? It's a 20th of an ounce. Okay. Yeah. And that was equal to a $1 silver coin, which was equal to, I have a silver certificate in here somewhere. Here it is.
When the Federal Reserve was created in 1913, 1 ounce of gold equaled $20. By stretching definitions of flexible money, governments weakened that link. Silver coins were diluted in 1965, and even pennies lost copper in 1982. Each change was marketed as convenience, but was really about cutting costs. Today, it costs nearly 4 cents to mint a penny worth 1 cent. In contrast, a $100 bill costs less than 10 cents to print, yet people must work hundreds of hours to earn it. This disparity reveals the system's core trick. Money gets cheaper to make, but costlier to live with.
So, I don't know if I can hold 2 coins in this. But okay, these at one point were all equal. So again, when that went away, you still had these 2, okay, but what happened in 1965? Because one of the things I want you to understand is that as it gets more expensive, so I'm going to back up a little bit here, but as it gets more expensive to create the money, then they need to go to cheaper money. So this 20th of an ounce backed $1, right? When they legalized the Federal Reserve, that was 1913 in December, Christmas time, convenient. They legalized the Federal Reserve. Now this 20th of an ounce backed $2.40 because they said they needed more flexible money. Look at the silver, right? Because silver was still our money up until 1965. Then they came out with, well, they were exactly the same size and shape because they needed to fit in vending machines. They needed to be all the same, except you look on the edge. This is all silver. This has base metal, some copper color metal in the middle of it. So this retains its value. We have a quarter card that we use. This actually costs us somewhere in the vicinity of about $6. This doesn't even buy what this originally bought. This is nothing. It's garbage, right?
The next phase of money is digital. Central bank digital currencies, CBDCs, promise efficiency but give governments total control over spending and surveillance. Stablecoins issued by corporations like Amazon create similar risks, except private companies dictate their use. Both systems justify money creation through debt and consumer purchases. Recent U.S. legislation even requires stablecoins to be backed 1-to-1 with dollars, artificially boosting demand for U.S. treasuries at a time when foreign investors are turning away. This manufactured system pushes us closer to inflation and potential hyperinflation, as unlimited digital issuance further erodes traditional currencies' purchasing power.
And look at the penny. The penny is going away because it costs 3.9 cents to create 1 penny, which prior to 1982 was 85 or 95% copper. In 82, they took it down to 15% copper because it was too expensive to create the pennies. And now they're getting rid of the pennies altogether because it costs 3.9 cents to create each penny. But do you know how much it costs to create each $100 bill?
With the paper, probably not a lot, but now that it's digital, it's free, isn't it?
Exactly. You went exactly about. This actually, according to the Federal Reserve, costs them I think it's either 9.4 or 9.7 cents because it's got that digital. Oh, this is an older one. It's got that digital strip in it.
Right.
Okay. It's got that digital strip in it, so it costs a little bit more. Now you have to work 100 times harder for this, where all of that money, the difference between the 9 cents and the $100, that's all gains for the central bank. The central bank then takes that money, and that's how they fund themselves. But to your point, and this is it, and this is what I'm trying to tell you, when money gets more, and when the current money costs more to create than how much they have devalued that currency, they have to go to cheaper and cheaper money. And frankly, the cheaper and easier it is to create, the more money gets created and the less value all of that money that's out there has.
Oh my goodness.
And let me point out that the Federal Reserve, with all of that's called seniorage, right? With all of that money, all that new money creation, that they get to keep the difference between the cost and you, they still ran losses. We're now in, I believe, the 4th year in a row where they haven't been able to give the Treasury, because if they have any left, that's the money that goes to the Treasury.
Gold's spot price today is shaped not by physical supply, but by paper contracts on exchanges like COMEX. These contracts allow virtually unlimited paper gold to exist, suppressing the visible price. But gold's real function is to preserve purchasing power across generations. Analysts estimate the fundamental value of gold, based on global debt divided by known above-ground supply, ranges between $33,000 and $40,000 per ounce. Compare that to the market price and you see how undervalued physical gold is. History shows that when trust in paper systems collapses, gold reasserts its true worth, something governments and dynasties have always understood.
Yeah.
It's disgusting.
It's evil.
Yeah, digital money is way easier. And you brought something up earlier that I think we should talk about a little bit more, and that's the difference between CBDCs and the stable coins. You know what the difference is? Who has control of them? You can take your pick. You want the central banks to have control of it and all of that, or do you want Amazon? Because Amazon has control of this. And while I was questioning, I mean, what justifies all of this money printing? I wish that happened to them, but debt justifies that money printing. And I'd been asking and seeking, well, what's going to justify creation of the new money? All of my reading showed me either debt or purchases. I got my answer. You know what the answer is?
What is it?
Both. Because they issue those stable coins, right? Yeah. That's about you going to Amazon and wanting to shop. So here, we're going to give you all of these benefits and blah, 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 blah. If you just use our stable coins, blah, 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 blah. So it's your purchases that will justify Amazon creating those stable coins. And then with the Genius Act that was recently passed in the US, then they have to go and they have to back those stable coins 1-to-1 with dollars, which means ba-boom, they have automatically created an artificial market for dollars and those treasury bonds that the whole world, the rest of the world is turning away from.
Yeah. Yeah.
Both. And let me tell you, this is why I believe that the stable coins are going to be used to usher in the hyperinflation and the next currency. And that's why I'm fighting so hard, honestly, on a global basis to get sound money, redeemable gold back into the new system. Best opportunity I've ever seen in my entire life to get sound money back in the system. And we can do it because there's 8.4 billion people on this planet. If we can get 3% just to convert their garbage fiat into sound money, now we got a voice. And I think we can, I don't know if I can do this or not, but I think we got a shot at having a seat at the table and demanding it. And it has to be redeemable. Because like we've seen in Zimbabwe, their attempt to get the public to use the new currency, they're in their sixth iteration. Hey, it's gold back. Now, mind you, it's digital. You can't redeem it. So trust us, because we're telling you it's 40% gold back. But they came out with a currency in April and they revalued at 44% in October. if it was truly gold backed, they couldn't do that because the
Yeah.
public would have rushed to take the gold out. But so if it is not redeemable, it is garbage. It is a lie. Don't believe it.
Throughout history, lasting wealth has rested on three foundations: gold, land, and rare assets. Unlike fiat currencies, these cannot be endlessly created. Central banks know this, which is why they're accumulating record amounts of bullion. Meanwhile, nations like Zimbabwe claim digital gold-backed currencies, yet deny redemption, making them worthless promises. Real gold must be redeemable, tangible, and finite. With 8.4 billion people on Earth, even if just 3% exchange fiat for gold, it would shift global finance. In a world of debt, digital control, and inflation, sound money remains the most powerful defense and our last chance at financial sovereignty.
How much of this crap has been created? With gold, or frankly anything physical, there is a finite amount of it. Plus, gold is indestructible. So we can account for 98% of all the gold that's ever been mined in whatever form it is. And you're in the UK, so I kind of like to think of the King of England, right? This is wealth that has lasted, dynastic wealth. It's wealth that has lasted in families at least 300 years. And it consists of three key things: gold, real estate, and truly rare collectibles. So that beautiful knotted tiara that Princess Kate wears, right? That is that asset. And it's either made of gold or platinum. I'm not really sure, but they have a lot of stuff that's made out of gold. So you take into account all of the gold that's ever been mined, and the Department of the Interior runs a report annually on how much gold is yet in the ground on a global basis. Total those two together, and you divide all the debt by all the gold, and it tells you what the true fundamental value for its most important function is. And the most important function for gold is to hold its purchasing power over time. That means I did it pretty recently, and the numbers came out that the true fundamental value of 1 ounce of gold is somewhere between $33,000 and $40,000. So if the spot market, which is just gold contracts, and they can create as much gold as they want without limitations, but the market reads it as if it exists, that's how they suppress the price of gold.